Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look at the Forex market on the euro currency after yesterday's FOMC doom and gloom. So you can see that was really volatility trading session, since the pressure inside of the Federal Reserve, the FOMC committee growing concerning the supporting of the quantitative easing programs, since some of the members of the open market committee starts to talk about the reducing and closing of the quantitative easing, since the balance, the payoff between the effect of the quantitative easing program and the possible consequences for the American economy is not in favor of supporting of the quantitative easing program. Besides, in the most recent time, we see that the US economy data improving, and that is the fact that also press on gold market. We have discussed this moment in our weekly research on the gold market in the fundamental part, because now this is really the challenge for commodity markets and for markets with that usually treated as the safe haven assets. That's why we now see some inflow in the stock markets and outflow from the gold and maybe even some bond market. So since yesterday among the members of open market committee and the Federal Reserve was some moments that point on the risk and some pressure that probably Federal Reserve will start to think about the starting of closing of the quantitative easing program. Well, that impact on the current market, that impacts on the Asian stock market, impacts on the gold, impact on the euro currency, makes all that solutions stands in favor of the United States dollar. So that's why, in fact, from the technical point of view, we see absolutely logical and development that we have announced in our weekly research. So that's development, that price action is absolutely stands in a row with the normal behavior when the market stands in the downward development. So what we see, in fact, first down 50% retracement, as we said, that was our preferable level for the retracement, since that retracement stands absolutely in harmony with our thoughts that how it should be to keep investors calm, to keep investors with the confidence that dollar will continue to appreciate. So that's in fact the retesting of these lows, hitting the 50%. As we said, the euro currency likes to show the 50% retracements. That was now our level 129.70, 129.75. So some small splash, a bit higher than we have specified previously, but that's just a few pips high. So now I think that we stand in a row on a road to this low. That is 127.50 area, and recall that in fact this price action also based on the stop grabber on the weekly time frame, not only on head and shoulders pattern but also on the stop grabber, and stop grabber suggests taking out of these lows. That is the minimum target of this pattern. What is more significant is that if market will continue move lower right to this area, it will move below the neckline of the head and shoulders pattern on the weekly time frame, and that in fact will be the moment where this pattern will be triggered and will start to work to the downside. Another significant moment that I see here, let's take a look. Market now is trying to move below the monthly pivot support one. When the pivot support one can't hold the retracement, can't hold the downward move, and market moves below the support one, it usually tells us that that move is not just some small short-term fluctuation, some small retracement on the bull trend or something, but that could be something more significant, and that could be the starting of the downtrend on the monthly time frame and on the weekly time frame. In short-term perspective, today probably will be the relief trading session, since yesterday was really furious action and market needs to take some pause, take some break after this really tremendous action yesterday. But speaking about the short-term target, maybe it could be reached even on current week, maybe in the beginning of the next week. Difficult to predict currently, but take a look at this level. That is the target of the stop grabber. That is the minor 618 extension of that pattern A, B, C top. 618 extension stands right here. Also, if you measure the swing of that extension of that swing, you will get that 127 extension of that swing stands precisely in the same area. So 127.50 is the short-term target on the euro currency of this downward move. So if you have missed the entry as we have suggested in this area, don't be upset with that, because you could use currently this swing down to try enter on some shallow retracement to the upside. Since market now stands not at the support, maybe this minor 88 pip support, not yet oversold, this bounce will be probably small. So that could be another chance to possess yourself on the potential move to the downside. One thing that you should care about is in fact risk-reward ratio, since it depends on where you place your stop, because target is not too extended from the current price action. Well, if we take a look at the 30-minute chart, I decided to use today a 30-minute chart because it's a bit more representative than hourly time frame. What we see here, that is the spike that hit our target, fast acceleration down. Market now stands in some consolidation. If you would like to enter short, then you should probably keep an eye on this level, somewhere between 129.70, 128.70, 128, probably weekly pivot point 90, it's 20 pips range, because as I said, market not at the oversold, not at the support area, hence it has no reason to show some deep retracement, especially when after this retracement that already has happened. We have two small stop grabbers here and here, that suggest taking out of these highs. Then probably market could reach this level and take a look at this dot line. That is neckline of the head and shoulders pattern that has worked. Reverse head and shoulders pattern. We have in fact traded with this target. Okay, that is coincide with the 50% resistance of the thrusting candle. Okay, also slightly higher stands the confluence resistance and weekly pivot point. So if you would like to enter short, it's probably better to watch for this level around 128.70, 128.80, with the placing stop above confluence support, and better to place stop above the 50% resistance of the thrusting candle. That is also 50% of this major swing down. So that will be rather tight stop. It's approximately somewhere about 30-40 pips. Target from this move to the downside will be greater, so the risk-reward ratio will be acceptable. So that's in fact all that we could do currently, because I don't see anything more to do in the euro currency now. Just if you have entered short, you could easily move your stop to the break-even and think about the potential scale-in, adding to your position with the greater move to the downside. But be careful, as I said on the forum, each scaling in with the position needs to be closely calculated, carefully calculated. You could find an example of that in our Forex military school, how it's better to do, since this is really a significant responsibility when you add to your position. Well, let's see what will happen. I think that market could show this retracement, but do not count on too extended retracement. Euro currency, when it stands in the trading in a trend, very rare shows too significant retracement. Usually this is 3 or 50% is maximum. So keep an eye on this level. Maybe it will let us to add more or to enter short for those who haven't entered in this area.